Hi, I'm Roger Conrad. I'm editor of Canadian Edge newsletter, and what I want to talk to you about today are some major issues affecting Canadian income trusts as we go into 2008. Now, 2007 was a year of unprecedented stress tests for this group, not just the change in the taxation, which it will kick in the year 2011, and all the itinerant effects on the market from there, but also we had weak natural gas prices, we had a very strong Canadian dollar, which hurt exporters to the United States, and then finally we had the U.S. Credit crunch and slowing economy, which historically has been very disastrous for Canada and has hurt prices of equities all up and down the line there. But some different things are happening this time around than has been the case. These are the main one being that there seems to be an extraordinary amount of decoupling, at least in terms of how companies have been able to perform. Now, the Canadian economy is still very much tied to the U.S. economy. With the NAFTA treaty, for example, trade really escalated between our two countries, and of course that continues to be the case. We're still their most important trading partner. About 75%, in fact, of Canadian exports come to the United States. But that figure is actually down from a high of very close to 90% just a few years ago. And what it illustrates is there are many other markets now for Canadian products, particularly in the natural resource area. And it's demand for these products, particularly in developing Asia and other nations, for energy as well as a host of other commodities, that's really kept this economy in very good shape. That's factor number one. Factor number two, that their whole economy just it never became as leveraged as the United States economy. If you look at their banking system, the rate of default in subprime loans is only about 2%, as opposed to a double-digit rate in the United States. So the banking system there is certainly on much firmer ground, and companies and well-run trusts are getting the credit that they need to sustain and run their businesses. That had been a concern in earlier months. Now, the real proof is in the numbers, and of course now we're starting to see earnings coming in from all of our favorite trusts. Now, trusts aren't as big as as large corporations, and so they don't have the armies of typically don't have the armies of accountants on hand to really get the filings out in a big way. So these filings are coming in slowly but surely, and in fact will continue to flow through into March. So we won't have earnings for the last quarter until some weeks hence on all the companies out there. But what we've seen so far has been extremely encouraging, and I think that it really bodes well for the rest of the year. Just turning to the oil and gas sector, because that's where people really focus their firepower on, tend to in the trust sector. We've seen pretty much universally very strong earnings across the board for these companies. Part of that is to be expected since oil prices did very well in the fourth quarter, but realized oil prices, and these companies of course sell a lot of their output forward so they can maintain their cash flows very steadily. Realized oil prices are still roughly $20, $25 below the current spot price. So those realized prices did go up in the fourth quarter. They're set to go up in the first quarter, and I think going forward that's going to be a powerful boost to their earnings. The second thing is natural gas prices, which, as I mentioned before, languished throughout the year of 2007, but have now started to come on. In fact, we had the biggest natural gas drawdown this week that we've ever seen, and that's been very bullish for the price of natural gas. So this hasn't been a profit center for the companies over the past year or so, but we are starting to see higher and higher realized prices for gas. We saw that in the fourth quarter. We're going to see higher realized prices for gas in the first quarter, and should be going forward into 2008 as they continue to ratchet up how much they sell forward and what prices they're able to lock in for that. So we're going to see some very strong earnings for these companies. We saw several takeovers last year. I think we'll see more. And again, this is happening more or less independently of what's going on in the U.S. economy. U.S. economic fears have dragged this group down. I think going forward, as the U.S. cycles out, we're going to see some really big gains. And in the meantime, very strong dividends going forward. So thanks very much for tuning in, and we'll look forward to talking to you next time.